When gold, palladium, and platinum are averaging somewhere north of $1,000, and we have silver sitting here at $18, that's telling you that they really fear silver more than anything else, because that is the power of the people that I like to call it.
Hey friends, Sean from SGT Report here. Thank you so very much for tuning in. I've got a very exciting update here for you guys regarding precious metals, gold, silver, the US dollar, the economy. We're going to talk about all of it today because things are getting serious, and no one better to talk to than Tyler and Paul from SD Bullion. Our friend Tyler, one of the founders of SD Bullion, is at a conference in New York. It's a CME conference, and I think he's got some interesting nuggets to share with us regarding JP Morgan. First, let me welcome Paul. How are you, Paul?
Doing good, Sean. Thanks for inviting me on today.
Well, it's a pleasure. Thanks for coming back on. And Tyler, you're in New York right now, huh?
Yes. Yeah. Thanks for having us on, Sean. And I've met the New York CME conference in New York. And last night we had a nice dinner. And it's first time here in terms of at the CME conference here in New York. And the keynote speaker last night was a guy named Dr. Jacob A. Frankel. And this guy is chairman of JP Morgan Chase International. So I have a couple bullet points that I'd like to share with your readers and some information. It's kind of interesting. The number one topic last night was about China. So the first thing he was talking about was the importance of the open trade between China and the United States. And also in attendance was Wang Xingying from, he's president of the Shanghai Gold Exchange. So there was definitely some conversation there about basically the market being opening up to China and gold and precious metals flowing from the west to the east, like we've talked about numerous times on podcasts. They've talked about how China was a growing influence in the world's gold market. And I believe, the CME Group overall just announced this week that they were making available futures and derivative exchange contracts on their platform with the Shanghai Gold Exchange. So that was definitely an interesting talking point last night at the CME dinner. And then the other major bullet point, and I about fell out of my chair when I heard this, was the chairman, JP Morgan Chase International. He, at one point, I'm going to try to quote him as best as I can, says that we now have a generation that has grown up without knowing inflation. And I look around the room and I'm like waiting for, some sort of reaction to say, that's not exactly true. I'm about falling out of my chair. I'm like, no, I'm talking about the table. I'm like, how much do you think it costs us for you guys to reserve this table 20 years ago? Like, is anybody listening to what they're saying? There's no way there's not inflation going on with the everyday purchases. Right. But this is a room full of financial institutions, full of bankers. And I was in shock. I mean, they manipulate these inflation, CPI targets to say, well, you can't buy the same vehicle now because it's upgraded. It now has automatic windows. It now has automatic locks. If you could buy that base vehicle that you could buy 20 years ago, it would still be, basically the same price plus, 1 to 2%. Right. It's just mind-boggling.
Yeah. Well, and look at housing. I mean, I'd hate to be a young person today getting out of college with a little bit of college debt, or in some cases a lot of college debt, and you want to buy a house and get married. Our first house we were able to buy for $150K with 5% down. I don't think you can get a house for $150K anymore, not where we live, and you can't do it with 5% down. So yeah, I'll tell you what, maybe what he's driving at though, guys, is the fact that inflation, when it comes in earnest, is going to be more of the hyperinflation sort of inflation. And people are going to have a rude awakening, especially those who don't have any silver or gold in physical form. And just real quick, and then I'll let Paul respond to that and inflation and what you guys are seeing with silver and gold. But I don't think a lot of people realize that my channel back in 2010 when I started it was a precious metals economy channel solely. And of course, I did talk about the deep state and the work of Peter Dale Scott and others, but it was precious metals related. And we're just getting back to the basics here, guys, because when hyperinflation hits, we want people to be able to protect themselves. When it turns into hyperinflation like Venezuela or Argentina, boy, it's just going to be a rude awakening.
Yeah, it sure seems like the people, we're seeing a big increase the last 2 months in people buying precious metals. Unfortunately, we're also seeing some people sell precious metals. I mean, people have maybe watched the last, 5, 6, 7 years and just waited to get back to the purchase price. So we're seeing bi-directional trading. The positive aspects coming out of yesterday's conferences is that everybody's seen this sort of increase in the metal market. We're seeing reduction in secondary products on the market overall. We're seeing some sorts of allocation coming back. I found out yesterday that Royal Canadian Mint is now going to be allocating silver maples. That hasn't happened in quite some time. So you're seeing some really strong demand come in underneath the precious metal market. And everybody pretty much had a positive outlook on what they saw here in the next 6, 9, 12 months of where the precious metal prices are going to go. I think we saw a nice run up over the last 30 to 60 days, which is great. I'd like to see some continuation of that and get gold back up towards about 1550. But that's the positive aspects that came out of the conference as well, is that it sure seems like we have some really positive momentum in the precious metal industry.
Can you flush that out when you say the Royal Canadian Mint will be allocating silver maples? Do you mean they're going to be limiting supply because demand is so high?
Right. So the 10-ounce Royal Canadian Mint silver bar hasn't been able to be purchased by direct distributors for months. That's been a known issue, but it's not necessarily that big of a, not that popular of a product. The 1-ounce silver maple, that's their bread and butter on the silver side. That's everybody's familiar with. They are going to allocation, which means that of their authorized purchasers, you're only allowed to purchase a certain amount. And therefore, it kind of goes on, however much you might have purchased over the last, 6 months, year, 2 years, whatever the formula may be. But there's too much demand for them to keep up on, and they're basically gone in the reserves. I mean, a lot of these mints, they build up reserve to handle times when you have demand. Silver Eagles, for example, U.S. Mint, they try to maintain a stockpile, I believe, around 5 million or so Silver Eagles in addition to what they're producing, so that if demand does hit, they have, some cushion to keep up with it. The Canadian Mint's done with the cushion. They cannot keep up. They have some more demand than they can keep up with. So you should start seeing some potentially premium appreciation or higher prices when it comes to a newly minted product. And we're seeing that across the industry. And the other key part about that, which I think people are underestimating, is, a year ago, Sean, we talked about the Republic metal situation. And before that, a year prior to that, roughly, we were talking about Ella metal situation. And those two outfits being offline have created a hole in the industry when it comes to a lot of refining, a lot of minting, blank production. There's not a lot out there. It has not got any better. Sunshine Mint is very, very much behind. A lot of national mints use them for blank production, and they are really far behind. They are used for our Royal Lion, our Tree of Life. They're also used for the Sergeant Port round that I'm not sure if your listeners have heard about, but your 1-ounce Sergeant Port round is made at Sunshine Mint. Right. So I know we have a pretty limited run. The first run, if we had to go back and order a second batch of Sergeant Port rounds right now, we're probably talking 8 weeks for us to get a restock of that round.
Huh. Yeah, guys, if you're not familiar, SD Bullion has been a sponsor of SGT Report now for many years. It's been a good collaboration, and these guys are a trusted source. So I'm always a little puzzled, but I guess it's because, I have moved away from just talking about precious metals over the years, and I've delved into trying to uncover and expose the deep state so much. But it does need to be said that SD Bullion is the trusted source I use. So when I finally decided to actually make an SGT report 999 fine silver coin at just a couple bucks over spot, depending on how many you buy. Decided to do it with SD bullion, and that coin is minted by the Sunshine Mint, the same mint that makes the silver American Eagles. So you guys can click the banner at the top of SGT Report to go check out that coin, or I'll leave a link below. Paul, do you want to talk about demand for silver and gold or anything else regarding what you're seeing? Because for those who aren't aware, silver this year has vaulted from about a low of around 14 to, where is it now, 18 and change?
Yeah, we're holding in support just above $18 here, Sean. Yeah, and what Tyler is talking about is important right now because premiums have not yet seen that rise like we saw back in the end of 2015 and the beginning of 2016. So, I think that it's going to start moving again. Another thing to be looking for is going to be premiums on 90%. That's going to be your leading indicator in the silver market because there's such a finite supply. Because technically, when we're talking about the mints and their silver coin production, the U.S. Mint, for example, is supposed to mint enough silver eagles to keep up with the demand. So it's basically unlimited based on the demand. But as far as 90% goes, that's a finite supply. All that's ever been minted has been minted and will not be minted again. It's up until 1964 mintage in quarters, dimes, and half dollars. So that's one of the things I'm looking at as a leading indicator to see what's going on with the premiums. And right now, as we see this increase in demand, because the excitement is coming back in the gold and silver, the Western retail buyer is now starting to wake up from this slumber. And it really is amazing with what Tyler is talking about with the Royal Canadian Mint, because the mints in general have had a couple years now to build up their stockpiles. And it just goes to show you that before the interest really even comes back with a vengeance, we're seeing that they're starting to run into issues. So I find that very interesting. But I would like to give an update on the silver market if I could there, Sean.
Yeah, please do. And you talk a little bit about the manipulation if you want as well, the manipulation of the prices of gold and silver. Are you surprised at all to see silver actually break out of the chains of the manipulation and gold too? Or was it just a matter of time given negative interest rates, given QE to infinity? We see that Draghi unveils more quantitative easing, the ECB QE to infinity. Open-ended ECB QE is what Zero Hedge is saying. I guess it was just a matter of time, huh?
It is just a matter of time. I don't think that silver has fully broken the chains of manipulation just yet, but I'm seeing these nice upside surprises, as I've been calling them, and I'm also looking at platinum too, seeing the platinum breakout. And I also believe that palladium, if I'm not mistaken, is hitting all-time highs again today as we speak. I'd have to double check that because I was sent that in a DM. But either way, yes, silver is breaking out, and it is only a matter of time because there's so many fundamental forces that are hard to keep the metals suppressed much longer that are going on. What you are talking about is what's going on around the world. Specifically, you're talking about in Europe. But those same conditions we see are right here in the United States as well. We have Jerome Powell, chairman of the Fed, speaking about they're going to do whatever it needs to keep this expansion going. Just yesterday, we have President Trump talking about floating out the possibility trial balloon of ultra-long bonds. I think the exact phrase used was substantially increasing the duration of the bond. So we're talking about 50 or 100-year bonds.
Just explain that. 100-year bond. I mean, is that the very definition of insanity? Who would buy a 100-year bond? And by the way, Kitco's reporting palladium live price today, $15.98 bid, $16.23 ask, up $45, 2.9%. I remember I had 1 ounce of palladium, guys. I sold it back around $9.50 a few years ago. I remember when palladium bottomed around 150 or 200. It's almost at $16.25, Paul.
Yeah, palladium is one of the things I wrote about on Monday, and I said I want to be looking at palladium this week to see if we get a break to all-time highs. And now I'm looking at the chart right now, and we have. And one of the things I'm looking at is palladium has been leading all of the precious metals for the last couple of years. So this is very bullish. I just want to get back onto this silver thing 1 second for the bullish fundamentals that I'm seeing in the market right now.
Yeah, I mean, I'm sorry to interrupt, but I just want to make the point. Gold and silver in physical form make a whole lot more sense to me than 100-year bonds. That's all I want to say.
Yes. And not only that, but 100-year bonds that are barely paying any interest. And if the powers that be could have it their way, they would be paying negative interest. Right. So it really is amazing. It comes back to the the whole greater fool theory, where the only reason anybody would buy one is because a central bank is going to buy it from them, because other than that, there would be no way to purchase a bond like that. That's losing because it's got a negative interest rate. But in June, the metals started running. Gold broke first. Silver hesitated, as always is the case, because it's a smaller market. Silver then started moving in June, and we got a little consolidation towards the end of July. And I remember at the end of July, I was noticing a lot of back and forth between the bulls and the bears. Oh, this is just another false breakout. Because if you recall, in 2018, we could never really break 1750. But so we broke it, we were at 1643 at the time, at the end of July. And everybody's like, well, that's it. We're never going to get above it. We're never going to get above resistance. We couldn't even get above 1750 last year. Well, I looked at that as a healthy sign, because when everybody is super bullish, that's called on one side of the boat, right? So that boat's going to tip over. But when everybody's super bearish, well, they're also on the same side of that boat, and that boat's still going to tip over. But if you got about half the amount of people that are bullish and half the amount of people that are bearish, well, that's a really healthy market. That's a sign of a healthy market. So I said, I think that the next move is going to be higher, not lower on the pullback. And sure enough, silver took off again. Since the end of July until, call it 1820 if you want today, we're up over 10% again, even after we've come back down off of that 1950 spike from last week. Now, I'm seeing similar bullish fundamentals this week in a similar fashion. What I'm seeing this week is not so much the bulls and the bears, because there's not a lot of debate. I mean, silver is up over 30% from the lows from earlier this year. So it's not up to debate whether silver is in a bull market or not. Silver is in a bull market. However, there's a lot of back and forth right now, especially this week. There's been a lot of articles on silver doctors just about the people who are, adamant that there is no manipulation, to the people who are saying there's total manipulation. They are just cutthroat with hostility going at each other this week. And I'm looking back to what happened at the end of July there with the bulls and the bears adamant about whether silver is going to correct big time from 1650 or whether it's going to continue higher, which it ultimately did. I'm looking at it the same light, and I'm saying this is a really healthy market, because these two groups are really going after each other, especially this week. So, I have a bullish outlook, and I think that for those fundamental reasons, I think that this pullback and consolidation could be over a lot quicker than people are realizing here, Sean.
Yeah, well, look at this gold chart for today, fellas. This is pretty amazing. New York opens up, gold spikes. I mean, it spikes, goes as high as almost 1530. Then, of course, it's monkey hammered back down over subsequent hours down to around 1500. So it's only up $1.30 right now. It amuses me to hear you talk about the debate about manipulation in the metals markets. All you have to do, guys, is Google gold and silver manipulation, and you get returns like this. Gold, silver manipulation, CFTC finds Deutsche Bank, USB, HSBC. That was from January 30th of 2018. Here's another one from November. Ex-JP Morgan silver traders guilty plea could boost the market. And another, 3 banking giants charged for manipulating the gold market. Here's another from moneymetals.com. Bullion banks manipulation schemes put taxpayers at risk. These guys have been monkey hammering gold and silver for as long as you guys and I have been having these conversations. This isn't new. This is age old. It's decades old. But sooner or later, they're not going to be able to do it anymore. And sooner or later, we're going to see a $2,500 gold price and a $50 or $75 silver price.
Yeah, those are good points, Sean. I think we're really going to blow through these levels in silver, especially just because silver has been the one that's been held back the most. It's a precious metal. It's one of only 4 precious metals. And when all the precious metals are averaging $750, and when gold, palladium, and platinum are averaging somewhere north of $1,000, and we have silver sitting here at $18, that's telling you that they really fear silver more than anything else, because that is the power of the people that I like to call it. But, And you're right, Sean, this debate should be settled by now. This debate should have been settled a long time ago. And I don't know how many more examples it's going to take, but, the evidence is clear. I mean, they're pleading guilty and they're paying the fines, and, the exchange stabilization fund on the Treasury Department's website in plain English right there just says, the exchange stabilization fund can trade in gold, foreign currencies, and other instruments of securities and credits, right? So basically they're allowed, they're telling you that they're going to go in, and that was seeded with the Gold Reserve Act of 1934 to fund the exchange stabilization fund, but they're telling you right there at treasury.gov that they're going to be able to go in any market they want for any reason, and they don't even have to tell us about it. So yeah, the manipulation thing should have been settled. Right.
If I could jump in there, I've actually been asking a few people questions in New York this week with all the banks here. I asked the person that sponsored the table last night if I could ask the J.P. Morgan, Dr. Jacob Frankel, who's the chairman of J.P. Morgan Chase International. I was going to ask him if they're done manipulating the markets. And he told me if I was going to ask that question, I had to go somewhere else in the room. So I didn't ask that question out of respect for the table. But two names came up. One of the individuals I came in contact with worked for Blythe Masters, as I'm sure you guys are familiar with that name. And, he actually had somebody that was supposed to be reporting to him kind of go past him in a room one time and ask Blythe Masters, why are you guys manipulating silver? And I said, what'd she say? And she said she didn't answer that question. And then he was never invited back into the room again.
Yeah.
The second.
Well, and by the way, guys, she's the brains behind the derivatives book over there, derivatives in general, to some degree. And that's something we haven't talked about yet either. 100-year bonds, QE to infinity, and derivatives books so huge that it's blowing Deutsche Bank up as we speak.
Right. Yeah. She was pegged by basically the inventor of derivatives back in the day. And I just to touch back on that gold price point that Paul made. The central banks at the beginning of this year, first half of this year, purchased a record amount of gold. Central banks, they purchased, I believe it was close to $16 billion of gold in the first 6 months of the year. And that's just a staggering number. And I think when you're looking at the gold silver ratio, that's one of the things I look at on a regular basis. The central banks were driving up gold, and the gold silver ratio just exploded. I think we're at one point, 93, 94 to 1 before it kind of started going down the other way. Central banks love to buy gold. I mean, it's easier to store. It doesn't take as much room. The rates in insuring gold are less because of those reasons. Now you're seeing some demand come in for silver because the gold to silver ratio has got so out of hand because the central banks know what's going on. The powers that be, those are the central banks. Now silver is catching up, and it's good to see this gold to silver ratio down to 82.85 to 1. I think today that number is still ridiculously high compared to historical standards. So yes, silver is rallied like Paul has mentioned, but gold to silver ratio is still saying when is silver going to catch up?
Yeah. Well, the point that needs to be made for those to whom this information is new, and again, guys, SD Bullion is the source I use to buy my physical precious metals. And if you order $100 or more, correct me if I'm wrong, guys, I think $100 or more constitutes free shipping on all orders. I mean, that's one of the best deals in the business. The historical silver to gold ratio, guys, is between 12 and 15 throughout history, 12 ounces of silver for every 1 ounce of gold. But the fact is, guys, they're mining the stuff out of the ground globally at a ratio closer to 9 to 1. For every 1 ounce of gold, they're finding 9 ounces of silver, 9.5 ounces of silver. So again, if and when hyperinflation hits, just take a look at how much silver is worth to Venezuelans or Argentinians and what it will be worth someday to Americans. I think someday in the future, guys, silver is going to have its day where it is once again appreciated as a store of value in a world where there is no more stores of value.
Yes, great points, Sean. And they're one of the only things that I hate to bring it down to this level, but it's really one of the only most simple things that a person can do to get a store of value, right? Because it's so easy to just say, well, I'm going to hold some physical gold or some physical silver in my possession as a savings account, and when I need it some years down the line, I know it's going to, at a bare minimum, keep up with inflation. And that's been shown throughout history at a bare minimum to be an inflation hedge. But that's just not all that it is, and that's why we're seeing these metals move. Silver is so much more than that. It's a hedge against uncertainty. There's also the speculation that's going on. There are so many reasons why people are getting into the metals, and that the metals are catching a bid here. And as far as just touching back on that inflation topic real quick, I don't know if you saw, but only it was either 40 or 60% of Americans could afford a summer vacation this year.
Right.
And I just want to say, I took my family, we had a very busy summer, so we never really got to take a summer vacation this year. So the only thing that we were able to do was take a day trip to the local amusement park. When I say local, it's 2 hours away. So it's a day trip. And Sean, for a family of 4, that one single day to the amusement park cost $1,000. And I'm not talking about Disney. I'm not talking about Universal Studios. I'm talking about just a relatively regional amusement park. So, the inflation is alive and well and kicking. And furthermore, if the Fed is saying they're bent on 2% inflation, and what that means is the dollar is going to devalue in purchasing power by 2%. That means that, on the other hand, if you want to take it one step even further, well, silver is going to be going up by 2% per year at a bare minimum based on just the Fed's efforts. So, the point is, yes, these all things are playing out. So when it comes down to what's the simplest, easiest way that I can protect myself, it is to have a gold or silver coin, bar, round, something, right? But in your hand. That's the way.
Yeah, absolutely. Yeah. Well, I'll tell you what, guys, let me leave you with this. This is an amusing article here. Government orders Google to let employees express unpopular political views. You can't make this stuff up. I mean, literally, this is the world in which we live, where the powers that be tell us that gold is a barbarous relic, silver is nothing of value. The dollar will go on and have strength as the world's reserve currency in perpetuity. And Google is being ordered to let conservatives speak about their conservative political views while at work without fear of being fired. It's an upside down world, and that's why we have these conversations. My guests have been Paul and Tyler from SD Bullion, sdbullion.com. Gentlemen, thank you so much.
Thanks, Sean.
Thanks for having us on, Sean.
Yeah, thank you guys. And folks, if you haven't already, download that Brave browser. Take a bite out of Google. It won't spy on you like Google's Chrome does, and it's free. It's got a built-in ad blocker. It's more than twice as fast as Google's Chrome. If you download it and install it, I think you're really going to love it. And for real money, visit our good friends at sdbullion.com. I will leave the link below this video. Check out the SGT Report 999 Fine Silver Round. And guys, thank you so much for your support. We very much appreciate it. For real news 24/7, you can always find us at sgtreport.com, the antidote to corporate propaganda. God bless. Bye-bye.
What Google and YouTube are doing is that they are deliberately destroying their platforms in order to achieve their political agenda.